What's up everyone, my name's Robbie, this is Robbie Manila, and today we're doing a stock analysis of JP. So by the end of this video, you're gonna see this little thing, and what this is my target price for JP. And it's gonna show you the upside potential or downside potential of the stock according to my target price. Now what do? I use 3 different methodologies to try to find a value for this stock. So the first thing I do is use a dividend discount model. Then I do a price to book ratio model, and then I do a discounted earnings per share model, and I derive the price weighting those different models together. So we have a lot to go over in this video. I'm going to go through this thing as fast as I can. So there's a lot of great information. I hope you stick around. Let's go ahead and let's get started. Thanks everyone so much for watching, and just remember, I am not a financial advisor. This is not financial advice. I do not hold a securities license. This is my opinion. Please do your own research and decide for yourself what you think about this company. All right, so quick shout out. Thank you to Root, who suggested that we go over JP. So thanks Root for the comment. I appreciate that. And I'm trying to get to 2,000 subscribers. I'm very close, so I would love it if you hit the subscribe button. Quick, let's go over what JP does. So JP is a bank. All right, I think we're done there. So let's go over the dividend. So there's a lot of dividend investors that probably watch this video. JP, decent dividend paying stock. So let's go over the dividend metrics. Very first thing we're gonna do today. So dividend metrics, dividend increase history, 11 years of increasing a dividend. So not too bad, better than that 10 years. So they hit that 10-year threshold. Now dividend yield is 2.89%. So an okay dividend yield, not the highest dividend yield, way higher than like the average of the S&P 500, so pretty decent if you're going for some yield. If you're looking for a dividend growth, the 3-year compound annual growth rate of the dividend is 14% for this company, so pretty good there. Free cash flow payout ratio. Now this one, I'm actually not using free cash flow because it's a bank, so banks, you don't really use free cash flow for a lot of the metrics. I'm going to use earnings on this. So even though it says free cash flow, don't worry about that. This is the just payout ratio based on earnings. 24.63% is the payout ratio. So far the dividend metrics are pretty good. So we're going to calculate what I think the stock is worth based on the dividend discount model. We use CAPM. These are just the inputs that we used here. I'm not going to go over that stuff. The annual dividend is $4 per share. That's what we're using. The growth rate I'm using is 5% growth going forward. The next year's dividend is forecasted for $4.20. And then the fair value of this stock would be $85.85. That would be the price of the stock according to the dividend discount model, which the current price is $138. So it's actually overvalued according to this model by 37.97%. Now, this is the most conservative of the 3 models we're going over today. So make sure you stick around to see what the other ones are. By the way, at the end of this, we're going through the technicals also. So hope you watch the whole thing. So here we have a price to book value methodology to find the target price of JP. Basically, I think JP is worth about $127 using this methodology, which is about negative 8% from where it is right now. But if you held this till 2026, it should be $161 per share, which would be 3.19% as the rate of return. If you're not sure what price to book value is, it's just assets minus liability of a company. Another way to say this is the shareholders' equity of the company, or you could even call it the net worth of a company. Like your personal net worth is your personal assets minus your personal liabilities. I don't want to really go through too much of the details on these, but just in case you're interested in this, there are 3 steps that I go through. Step 1, find the shares outstanding. I said they're buying back shares at 3% each year. Step 2 is to forecast the growth of book value. What do I do here? I look through some different time periods. So book value, growth over 1 year, 3 years, 5, 9, median, average. I'm going a little conservative. I'm going 3% growth in book value. Step 3 is I find a proper book value multiple. So what I do here, I look back at the different book value multiples over the past few years, and I take a median or the average of them. The current I look at too, and I decide which one I want to go with. So I went with a 1.4 times book value in this. This is right here. This is the year 2022. So this is forecasted. So if by the end of the year this does hit this number, it's going to be a negative 8% return. So basically the stock is selling for more than this right now. But if you held this till 2026, it'd be $161 per share, and that'd be about a 3.19% rate of return. So right now, if we look at the price to book value ratio, it's about fair value right now. Of course, if you have a different price to book value ratio that you want to use, there's a pivot table here. You can see the one that you like more. But that's what I'm using. Let's go ahead and move on to the discounted earnings per share. Sorry, actually, before we get to that, I do want to go through some comparables here. Now, usually I would go through what I call my Cat 5 score, but it won't really work that well in a financial institution like a bank. So we're just going to strictly look at some of the comparable metrics to different banks. So we have JP Morgan, Bank of America, we have Citi, we have US Bank, and we have Wells Fargo. So here we're just looking at some of the general metrics of the banks and we're comparing them. So for PE, JP Morgan has one of the lower PEs, so it's cheap compared to its earnings. For forward PE, JP Morgan actually has a bit higher of a PE, so it's a little more expensive in terms of its earnings than the other banks. In terms of price to book, it's kind of in the middle at a 1.52. A little bit more than some of the other banks, but not as much as, for example, US Bank. For price to book, it's slightly higher than some of its other banking counterparts. So, for example, US Bank is actually higher, but all the other banks are actually lower in terms of price to book. Earnings per share growth, 73% growth rate in earnings per share, which is good, but then you look at it compared to its other counterparts and not exactly the highest of those. Wells Fargo seems to be an outlier though, so we might not want to pay attention to that one as much. And then in terms of earnings per share growth over the past 5 years, how is it done looking backwards? So it's actually had the best growth in earnings per share out of all these companies over the past 5 years. In terms of debt to equity, it's not bad. It's 1.16. It's higher than some of these other ones, but in general, it's not too bad. After looking at all of these factors, what does it tell us? Well, basically, I would just say that JP Morgan is slightly more expensive in terms of some of these metrics than its counterparts. So now let's find a value for the stock based on the earnings per share. So what we're going to do is we're going to discount these earnings by giving it a proper growth rate into the future, discounting it into today's dollars. So what does this do? First off, what's a proper growth rate? So over the past 10 years, JP Morgan has had an 11.70% annual growth rate in earnings per share. So that's pretty high for the largest bank in the world. So I'm not sure if that's going to be able to continue, but I'm probably going to go with a more conservative growth rate on this. Over 5 years, it's been 17.8%, and then over 1 year, it's been 73%. So I'm definitely not going with these high rates of return, so I'm going to go actually with just a 6% growth rate for this company. Earnings per share right now are $15.35, so this stock price is at $138 right now, and what this is telling us is that it is worth $222 per share if we use this methodology. That's actually a 37% margin of safety. Usually I like to see about a 25% margin of safety here, so that actually meets all of my requirements for this valuation methodology. So let's take a look at the weighted average, because we have some really very different price targets based on different methodologies. So here we go, the weighted average target price I have for this company. We're not using a discounted cash flow because this is a bank. It doesn't make sense to discount cash flows for a bank. We have discounted earnings per share. $222 was this one. I'm using this as 40% of the weighting of this model. Then we're going to do price to book valuation. This is also going to be 40% of our model. 127 was the one that we got here. We don't do we're not doing price to sales. We're not doing EV to EBITDA. We are going to do dividend discount model. We got a very low $85 per share for this one. One of the things about this is maybe because JP Morgan is has a payout ratio of around like 25%, maybe that has a factor in this. Maybe if it was paying more like 60% of its earnings as a payout ratio as a dividend, maybe that actually would allow us to see a better dividend discount model valuation. But I'm using this as 20%, maybe because of that. It's really very much different than the other two valuation methodologies, so that's why I'm underweighting that one. So this gives me a target price of $157 per share. If we weight these different methodologies, this gives us an upside today of 13.15%, which would meet what I would be happy with as an investment right now. All right, so let's do some technical analysis on JP Morgan and see what's going on in the charts. So right now I'm looking back 5 years till March of 2017. This stock was selling for around, let's say, $78-ish per share back then. Now the stock got up to about $170 per share, and that would have been an increase in your stock price if you had purchased it back then of 118%. So you would have had a nice return if you bought this 5 years ago. Now, of course, the market has been volatile lately, so from the peak of what it was recently down to what it's selling for right now, you would actually have lost almost 20% if you bought it at the peak. So now let's take a look at what I think is going on technically with this chart. Here I have some Fibonacci retracement levels, and actually I think JP Morgan follows these levels pretty well. You can see support in this Fibonacci retracement level here in 119, 118 area. You can see some resistance down here or up here in 139 area. You can see some more resistance here in 152, and it actually ends up acting as support over here also at about 152. So in terms of Fibonacci retracements, actually this is following it pretty accurately, I would say. Let's zoom in here, get a little closer. So now I'm zoomed in a bit more. We're looking back to about June of 2021. What do I see here with the chart? So actually, I did a lot of this analysis yesterday, and since then, pretty big up candle today. So that's interesting. So what I had here was we call this a bullish wedge or a falling wedge. That's actually a bullish sign. So what happens is these little support areas here, this stock potentially can break up through this wedge. I had this little arrow here, and this is a potential resistance area, the bottom of this box. So I had it potentially bouncing off of this resistance back down to this support area. Now, another thing that's possible is it breaks up through this resistance. We have another resistance here if that does happen, and it could potentially consolidate in this box, or it could bounce off this resistance area here, go back down, bounce off here. This would be consolidation, or it could break down through here and go into this box and consolidate in this area. So these are all potential things that can happen here. What do I see here with the actual price targets? Well, we have the lowest it could potentially go, in my opinion, where there's actually a lot of decent resistance or support, here is 109. And then I have 120 also that has some decent support. Then we have resistance here at 139, resistance at 153. And then if it makes it all the way up here, we got 164 and 172. So these are all potential areas. These little boxes or in between these boxes are potential areas where this could consolidate. But these are the different areas that I'm looking at if I'm going to see what's going on with price action. And if it ends up getting close to any of these, for RSI, it's on its way up. That looks good, very bullish actually. And MACD is also starting to point up right now, and you see this little oscillator, this little green thing right here, that little tiny little oscillator is starting there. So potentially bullish signs for JP Morgan right now. We'll see what happens. Does it break through this resistance and maybe consolidate in this range? That's kind of what I'm thinking might happen going forward. Or it could bounce off this, head down to 120, potentially a good place to buy it there. So that's all I have for this video. Thanks so much for watching. Hope you enjoyed it, and trying to get 2,000 subs. Please subscribe if you like this. Hit that like button, of course, too. And I have another video coming up on the end screen. Please click it right now.